Water Cooler Wednesday. This week's topic, we're going to be discussing the FASB's proposed changes to some of the treatments for intangible assets, and it's essentially a proposed accounting standards update. So the goal here is to improve the disclosure of certain crypto assets, and our goal of this call today is to kind of run through just the meat and potatoes of what it consists of, evaluate some of the kind of criteria for how we might respond to the questions that they have, and then draft as a community, which is going to be spearheaded by Stacey. Stacey came to us with this idea. She has a lot of expertise on this, and to be able to draft a cohesive response to this that comes from a lot of a big coalition of a lot of thought leaders in this space, so that it carries a little bit more weight. So I'd like to kind of kick it off with Stacey giving us a quick rundown of the meat and potatoes of what's in this. Stacey is a CPA and a forensic accountant, and she specializes in this sort of stuff. So Stacey, would you mind taking it away?
Thanks, Taylor. So the FASB exposure standard or exposure document is basically a draft standard that they are looking at releasing as an accounting standards update. This is a great step forward and something that's been much anticipated and demanded and requested for years by the community. The update does not change significantly from a lot of what they've already put out in their board decisions of what they're considering doing. Some of the most interesting differences that I noticed is they removed previously, it caused a little bit of confusion. They were saying that you should include gains and losses in your net income, but you didn't have to track or report unrealized gains or losses. That was in a board decision. In this exposure draft, they've removed the things that you don't need to disclose. They removed any mention of that. And they have removed any specification of whether something is unrealized or realized gain or loss. So, some of our feedback might be, we need you to specify, are you saying unrealized gains and losses have to be tracked and reported and disclosed? Because they're not specifying that now in this new exposure draft, which I think is going to cause a little bit of confusion. On a fair value standard, you would track unrealized gains and losses, right? In their prior board decisions, they were distinguishing between the two. Another interesting thing is that they previously suggested that they wanted this standard to exclude native tokens and wrapped coins. Now, native tokens make sense because it's almost kind of like a type of fundraising, a type of equity. So the accounting for it really might be quite different. What is going to certainly be a question is if you are issuing a native token and the accounting treatment is going to be similar to equity, then does that automatically make it a security?
That's a good question.
And if it makes it a security, then the people who own that native token should not be applying this proposed standard. They need to apply securities type accounting to that native token. So they have said that they are in favor of excluding native tokens. That would be one area where we really need to have some discussion as a group and kind of decide, do we like that approach or not? Because they are asking for feedback. Do you think this scope is appropriate, right? If this scope excludes native tokens, then you're going to get into that. You open the door for a lot more of these tokens to be deemed securities, right? And maybe they should be securities, right? But if you include native tokens in the scope of this proposed standard, then you're going to be treating native tokens as if it's just another type of asset, like an asset creation, which I think is more in line with how a lot of the industry would prefer to have it done.
Yeah, well, they don't want the additional headache that comes along with registering as a security.
Exactly.
And the way that I've seen it handled in the past is that essentially, when you mint these tokens, at the time that they're minted, they don't have any value, right? So a lot of times you essentially tag whatever gas it costs to mint those tokens as like the total value of the entire token supply. So if that's what you're carrying this at, it has effectively no value. However, you're able to then sell those for value. So it's an interesting kind of dichotomy there.
Yeah, and I think honestly, it might be that native tokens just kind of sit there, but I think this standard has got to either, if they don't want to make a decision on it, it's just got to exclude all mention of native tokens as a specific category, so that then there's room to later include native tokens under this standard. If this standard comes out and it excludes native tokens, then that kind of gears you, puts you on the path towards treating it like a security. So that, I'd say, if they don't want to call a native token just a regular crypto asset, then all mention of it has to be excluded in order not to start pushing the community in one way or another, in light of the uncertainty about how you determine if a crypto asset is a security, right? They also exclude
just real quick, Stacey, I have a question for you. So when you talk about native tokens, would that be kind of like under the private issuer
yes,
tokens per your digital asset hierarchy?
Yes,
Okay.
and if it comes out as native tokens are going to be specialized accounting treatment, then that hierarchy would certainly require an update to add native token under private issuer coin, because it will now become suddenly a separate class of asset that has to be tracked, disclosed, and accounted for in a slightly different manner. Particularly if FASB decides we want native tokens to become some kind of equity. And fair enough. I mean, you're going to sell the native tokens and receive cash for them. I mean, it has a lot of the characteristics of like equity. Private stock.
The main thing that it doesn't have is just that you don't receive a portion of revenue or profits. I mean, so
it's like an equity, but then it's also like just like a product that you've created and you're selling. And that's obviously we could get sidetracked and we could get into this.
Yes.
So moving on, they also exclude wrapped coins, which I don't see the argument for excluding wrapped coins. So that's also something that I would like to have a working group to discuss whether or not wrapped coins should be in or out of scope. They also do not make any mention of illiquid altcoins. And they say one of their questions, question 11 is, should they have additional disclosures? And I have chosen that question to respond and say that I think you might need to have additional disclosures over illiquid altcoins. In fact, it may be appropriate to require that illiquid altcoins are only put on the balance sheet at an estimate of their realizable value. In other words, you will need to know what the tokenomics of the coin you're holding are, and understand what percentage of fees are going to be owed if you sell any of that. At a minimum, just taking those fee percentages, deducting it from the total held, and then coming up to an estimated realizable value of some kind, which the terminology might change, but then only that goes into the balance sheet line item, because what you really hold is not the full value of that. And sometimes these tokenomics will take 50%, upwards of 50% away from whatever you sell, or I've seen it, around 30% of your sales will go towards fees, right? So you only realize, if you were to sell it, the realizable value at the balance sheet date will be like 70% of what you actually have.
Yeah, I mean, working at TrustSwap, this was an issue that we came across often because we were a launch pad. So oftentimes we would take payment in like a very significant portion of that project's token, like upwards of 5%, 10%. So when you have a liquidity pool on a DEX as the main place for liquidity of that token, and they're not going to have 5% of the tokens apply on a DEX. I mean, if they do, that's on the high end generally. So if we went to move those tokens, we could move the price to zero, right? Because we'd be draining almost the entire liquidity pool. So in that instance, yes, we can recover some of that fee in the immediate future, but it's a process, and there is a significant reduction in the X value of token times number of Y tokens, right? You're not going to be able to realize that in that instance. So definitely needs to be considered as well. Really good point there.
Yeah, so I think that either that has to go into, they are requiring some disclosures on what is a restricted coin. So maybe that, we move that response into, well, you need to treat these illiquid altcoins as a type of restricted coin in a way. It's not really restricted, but it's kind of like, it's not worth that exact exchange value that whatever you have in your wallet. So I would say those are your kind of like your biggest differences or biggest notes that I have on this exposure draft. What we'd really like to do, and we're putting out this list, the offer is get a working group together and have a first meeting after the tax deadline, because I know a lot of you are trying to hit April 15th. So we'll have our first meeting. I have drafted responses to all of these questions. And we'll circulate that draft and then arrange for probably a few. I'm thinking probably it's going to be 2 or 3 meetings, group meetings, to walk through each question, to discuss it, to get people's comments and feedback, and essentially put together a response from the crypto CFO community. I think that will give us a lot more of a well-rounded approach to things. It's multiple people's opinions. We'll be able to also have a conversation about, like, well, are there tax consequences to, a lot of times accrual accounting, can do whatever it likes, and then tax is just cash basis. But sometimes there's overlap where the way you do your accrual accounting or the way you recognize things will affect your taxes, your net income and so forth, and how you recognize things. So being able to have tax professionals weigh in on certain matters is extremely valuable as well.
Yeah, I think that we do need to make sure that because I think that oftentimes people who are specialists in, accounting and audit, and people who are specialists in taxes, they sometimes confuse the two, because there are, as you state, there are major differences. So having the combination there is important in on that discussion. I'm really glad that you're spearheading this, and I'm excited to kind of help facilitate some of these discussions. I think that it should be outside of, in the future, it should be outside of the Water Cooler Wednesday as like a time where just like we know everyone's going to meet, so that like people put it on their calendars as a thing where it's like, it's not going to be me talking the whole time. It's going to be an actual discussion. And as this one, it's really great to have your kind of insights on this. So I think that that's a really great initiative that you're spearheading, and I'm excited to kind of get this out there, because I think we should even do a press release on it as well once we have our draft responses and we agree on them.
Absolutely.
I think that's going to be we can kind of get that out, because I think that's a huge, to have people that are coming together that are all professionals in the space, that are respected in the space, initiating a response rather than just, Joe Schmo over here. And even if it is professionals, but just one voice is quieter than multiple. So I think this is a really great thing that you're having this.
I'm a lone person, what's the phrase, like a wolf crying in the desert or something, basically, like, my voice it gets lost, it's not significant by itself, right? But if we have a group together, that becomes more significant. And I think it's more impactful. It means more to the FASB team that is developing the standard. I would really like, if you have anyone who is acting as a CFO of a company, for them to be involved as well, or a controller, someone with, operations or chief accounting officer type experience, that would be extremely valuable. Having someone who, I think it's, I'm blanking on her name, but she's I want to say chief accounting strategy officer, something like that, for Gilded. That would be valuable to have her part of the group. Mitch, because you have so much experience in analysis and due diligence and the interaction of different accounts and all that, I would really love to get your input on like the whole concept of whether or not, the scope appropriate, right? I think that you have brain to think through those questions.
Yeah, happy to get involved with that.
Yeah, I can invite Joey, who is the current CFO at TrustSwap. I just started working with them again as a strategic advisor on that stuff. I'm helping them do their restructure. They're moving into the UAE, and they have operations in El Salvador. So I'm kind of coordinating the international stuff on that side. I know that Joey is a US CPA, Trust Swap doesn't touch the US at this point, but I know that he'll have some insights. And I think that him being an active CFO at a crypto startup as well could be good to have his voice in there as well. He's also the ex-CFO at Gilded. So
Well,
I think he'll have some good insights there.
here's the thing is that if you're international, if you're not in the US, you still have IFRS, right? And you're going to be you know, one thing that I probably wouldn't think about, but someone like him will think about, is what's the nature of the translation between GAAP and IFRS, right?
Yeah.
GAAP has a tendency, and because I'm a GAAP accountant, I have a tendency to be overly rule-based, right? And to want to have guidance down to, like, the little detailed level, right? Whereas international accountants tend to have a lot more leniency in how they apply things. And so having someone from his background may help us from getting too into the weeds of things, and help us, kind of pull back and stay at the higher level of, well, people need flexibility in how this particular area would get applied, right? And to help us recognize that, because there's a lot of organizations that report in GAAP and IFRS, and they have to do the translations every period that they report. So we don't want to have a response that encourages an overly prescriptive standard.
Yeah, I was just going to bring that up too, that I think we should compare this standard to, IFRS and other international standards, and do a comparison of, what may be different. I think FASB is always trying to kind of align with IFRS on most issues as well. So I think that's typically well received by them. And obviously has a huge impact on crypto accounting because it is such a global industry. You don't want to have too many like GAAP to IFRS adjustments. That just kind of creates more headache and more confusion for investors and end users of financial statements. So, as much as we can align everything, I think that they would also, like to do that. So I think the goals are aligned there.
I also would love to talk to Joe David as well, because and get his insight. I mean, I guess he would have less of a perspective on MICA. But I don't know.
He's in the UK, right?
Yeah, I was gonna make the connection, but Brexit, they're no longer in the EU, so I guess MICA is less applicable for his expertise. But I don't know if that, I'm less familiar with what MICA includes, but that might have some guidance in there related to this that we could lean on as well.
Yeah, it wouldn't hurt to have someone from the UK, but I think the focus definitely needs to be on, a couple of international folks is great, but we want to focus certainly on US CPAs.
Absolutely. Yeah. Cool.
All right. Well, so what we'll do is we'll put that together and we'll send it along with a cover letter and a summary of who are the people who participated and contributed to it, with, biographies, so they can understand who we are and why we're qualified to comment on it. And we'll prepare that as a letter. The response deadline is the first week of June. I want to say it's June 2nd. So if we have a complete answer draft by May 15th, that provides us time to put together all the, the cover letter and the biographies and all the other material, do final, reviews over it. We're all busy professionals, of course. And so I'd like to just go ahead and put out the invite and see who we can collect, and then put our first meeting on the calendar. And I will circulate my draft responses within a week or so.
Yeah, FASB actually, they publish the responses, I think, as they review them and receive them. There's only 3 up there so far.
Okay.
Like someone from TaxBit, I believe, responded, but other than that, I don't recognize the names.
Okay. All right.
Very cool. Yeah. I mean, so thank you very much for kind of spearheading this, Stacey, and we definitely want to continue pushing this forward. Brandon, what do you think is the best way to kind of make sure that we get as many community members involved in this as possible? Do we want to, I know we talked about sending out an email blast. Maybe we do a push notification or something like that so that we get in front of people. I know not everyone has the mobile app, so they may not receive the push notification to the phone, but I think that's a good way to kind of get it in front of eyes. I guess we can strategize about that offline, but I just kind of wanted to.
Yeah, I think that the first level will be to send out an email from, I know Stacey might have something put together already, but we can send it from Taylor. That way it's coming from the company, blast it out to the entire community. We can also make a post, I can do a sticky post in the community with a form that people, quick little first name, last name, email, and then we can gather names that way, and just kind of highlight that, and then get people to the first meeting. We can do it that way. Probably the best way.
Maybe as part of that form, we could have like what day works best for you and what time, in general works best for you, so that we can organize the time where it's best for everyone to kind of or as many people as possible.
I think probably we'll try to. My thought is maybe identify a core group of people.
Right.
Find a time that works for us, and then post that meeting on the website as anyone can join. Because once you get over, I'd say probably like 3 or 4 people, 5 people, 6 people, and like coordinating a time, especially with like global locations, it could get rough. Or potentially, have these as recorded sessions that can be viewable, and people are able to reach out, comment, say, hey, I couldn't attend, but I noticed that, this was your response. I wanted to provide this feedback.
Absolutely. Yeah, I'll create a whole section in the community. That way we can have it all together.
And then depending on how they go, and if we want to do this as well, we could include in our draft responses, hey, here are the discussions that backed up how we came to these responses as well. So that if FASB wants to review those as well, they could take, I don't know. That's just an idea. I don't know if we want to do that. But
it's not a bad idea, but I don't think they're going to spend time looking at it, to be honest with you.
Yeah. Yeah. Okay.
Sounds good.
Cool. Well, thank you so much.
When available?
Oh, what's this?
Oh, did you grabbed a little sticky there? What is that?
Nice.
Okay.
Use that for sure. All right, guys. Appreciate everybody coming. Moving forward, this will be the new time for the Water Cooler Wednesdays. So I'm sure the rest of the community will get familiar with that, and we'll go from there.
Sounds good.
All right. Thank you. Thank you all for helping to organize and coordinate this.
And thanks again, Stacey.
Absolutely.